thanks a lot for joining in. I want to first start by asking you about the exports because, in the last 2-3 years, before the pandemic is what I'm talking about, the export situation was very strong for the company. Services exports is what I'm talking about. Can you tell us when do you plan to get back to that level? Because the expectation was that now that things have recovered, the pandemic is over, travel has come back, export services will come back in a big way, but that is not fructified in this quarter. So can you tell us going ahead, what is the expectation?
Sure. First of all, good morning, and thanks for having me on your show again. Well, as you know, our growth that you will see in the revenues will be a mix of both domestic and exports, always. And we've been maintaining a healthy ratio, as you see from the past performance of Honeywell Automation. Specifically, after the pandemic, it was muted a little bit, especially in 2020, 2021, but we see that coming back again. As you know, the exports growth for us for services is linked to the global economy. And the global economy has had some headwinds. Everybody is aware of that. But we see some, good green shoots coming up now. We've grown high single digit right now in terms of our backlog, and that's going to give us revenues in the coming quarters. At the same time, there are two mega trends globally, which still are not stopping. And that's what will give us that exports tailwind. The two of them are the digitization part in industrial sector, and also the sustainability related solutions that are in demand right now. And for both, Honeywell Automation is well poised with skills, competencies, domain knowledge. And we believe that these two mega trends is what will see us grow in the export services as well.
Can you give us some numbers? Because, export sales in FY22 was the lowest that we've seen since FY16. So when you say that there's going to be a recovery, what kind of growth are you looking at?
My crystal ball is out for repairs right now, so I want to speculate. But I think we do see some real nice tailwinds, especially looking at the pipeline that we have in the global market. And as I mentioned, the two trends, digitization and sustainability, is something that I'm very optimistic about.
All right. Hi, good morning, Mr. Gaikwad. The coming quarter is going to be on a low base. I'm looking at December 2021, you did around 860 crores. Prior to that, you did 874. So it's coming on a degrowth quarter, actually. So given that kind of a backdrop, for this quarter on a year-on-year basis, mid-teens you should get back to, right?
So, hi, Nigel. First of all, I agree with you on that analysis. And we've grown. If you see our half-yearly orders growth and the previous year also, it's in double digits, almost a 2.5 times of the GDP growth that we see in India. And since we are a long cycle business, all of that order book that we have accumulated is going to get converted into revenues in the days to come. So we do expect a very optimistic view of our revenues.
So, Mr. Gaikwad, we are taking it as mid-teen growth for Q3. That is possible, at least as of now.
We'll see that. Like I said, my crystal ball is out for repairs.
Okay, all right. And you can at least tell us on the order book then. You have mentioned that a couple of times. Some of your peers have gone ahead and put out, some kind of number about how the things have shaped up. Now, the order book for, say, an ABB, they have said a 36% growth on a year-on-year basis with regard to their order book, order inflow, that is. What about for Honeywell Automation? I recall in your annual report, you will put out a good number. The external order booking had increased by close to around 31%. Is it in that vicinity, the increase?
You're right. So, like I said, it's about 2.5 times that of the GDP growth that we see at the YTD level. But also, I must mention here that it's not the volume, but the quality of orders that we really take a strong look at. Right. So it's easy to increase the order books if you don't really get the right mix and therefore the bottom line focus that the company needs to have. Finally, it's all about profits that one makes. So we are very careful about how we choose our orders and therefore bring in those which are high in quality.
Ashish, the crystal ball is out for repair, maybe because microchips are in short supply. So, sorry, it's a bad joke. But are those supply chain issues largely behind, or
no,
are they?
Really. I would be I would be honest on this one. I think it's getting better every week, every month, for two reasons. One, we've sort of begun to live with this reality, and we find alternatives, which is what exactly everybody needs to do. And secondly, I think people have pivoted to different chipsets, different suppliers, and therefore, while we are not out of the woods yet, we certainly are dealing with this issue much better today compared to, let's say, about 6 to a year back.
Okay. I wanted to ask you about what's happening in the industrial software space, considering that now the government will be commencing 5G rollout from FY23, which is touted to be a big positive, not just for the industry, but for players like you as well. You have this Honeywell Forge IoT platform. What kind of opportunity do you see here? I mean, you may not want to give us revenue numbers or expectations, but how large could be the opportunity size for someone like your company?
Sure. I think we are very excited about the 5G opportunities, especially in the area of industrial Internet of Things, as you mentioned. Where we are even more excited is about the sustainability agenda that each large company is taking up, the ESG bandwagon that you see moving fast. And the reason for that is when people are coming up with their net zero, goals to be carbon neutral by a certain number of years, first everybody needs to know what is that carbon footprint that they emit. And IIoT solutions, especially with the 5G as an enabler, will give them the as-is situation on what is their carbon emission footprint. So measurement and monitoring is a big part of it. We have a very strong play in those solutions in refining, petrochemicals, all those hard-to-abate industries. And that's where we see the digital sort of push and the tailwinds that we experience, apart from the regular stuff that I have talked to you about, like cybersecurity and the digitization, etc. So this is a new area, the sustainability, which is enabling the digitization.
Okay, all right. Mr. Gaikwad, some parts of the street believe that you are a semi-IT company. I wanted you to clarify if the BPO, the call center part, the IT part, is it housed in the unlisted entity or is it part of the listed entity?
Well, the listed entity very clearly houses the process and industrial automation and the software related to it, and then the infrastructure part, which is airports, metros, smart cities, hospitals, etc., etc. Right? So that's the big chunk of what we do, both for exports as well as for the domestic market, and then the associated engineering services there. And I wouldn't want to call Honeywell Automation as an IT company, right? It's not the typical IT services that you see where you may have a cost arbitrage. This is more based on industrial domain knowledge. It's more based on the skills and competencies in specific industrial and infrastructure areas. So, and I would like to therefore call ourselves as automation and software industrial company.
Okay, so that gives us clarity because, then, the more value-added business is in the listed entity. That's the takeaway that I got from that. And the unlisted entity could be doing the other services, going by what you just told us. Finally, sir, in terms of growth, Honeywell used to grow at a faster clip in comparison to the GDP. Now, that's been lagging a little bit. So going ahead, you're not giving us any numbers, but do you expect to return to that 1.5 to around 2 times GDP growth?
Absolutely. I think that would be our goal irrespective. We would like to grow 1.5 to 2 times of GDP always. But again, with a very quality conscious, decision on the order book. And I believe it's absolutely possible. There is a element of dealing with the inflation, therefore the pricing adjustments, supply chain related challenges that we talked about. But I'm quite confident and very optimistic about 1.5 to 2 times the GDP growth, in terms of opportunities in India.
All right. So thank you very much. Great speaking with you.